You were taught that taxes are just part of life, something unavoidable, something painful, something you don't question. But what if that belief is the very thing keeping you from real wealth? What if the system you fear was never designed to punish you, but to reward those who understand it? In this audiobook, Build Tax-Free Wealth, What the IRS Doesn't Teach You. You are about to discover a completely different way of thinking, not about money, not about income, but about control. Because this is not about hiding money. This is not about breaking laws. And this is not financial advice. This is education, awareness, and perspective. This is about understanding the game so you can finally stop playing it blindly. Here's the truth most people never hear. The tax system is not a trap. It's a map that rewards certain behaviors and punishes others. And once you learn how to read that map, everything changes. In this audiobook, you will discover why the wealthy legally pay less taxes, while most people unknowingly pay more. How governments actually want you to reduce your taxes. The difference between earning money and keeping money. The hidden incentives built into the system, and how to slowly, legally shift your financial life toward tax-free or tax-advantaged wealth. But more importantly, you will begin to see money differently. Because wealth is not built by how much you make. It is built by how much you keep and how intelligently you move. Here's a line I want you to remember. The poor focus on income, the wealthy focus on structure. Let that sink in, because everything you're about to hear builds on that idea. Now, before we go deeper, make this personal. If you're listening right now, and something inside you says, I've been missing something, then don't just listen passively. Make a decision, a quiet one, that you will start seeing money differently from today. And if even one idea in this audiobook shifts your perspective, hit like or write down the one sentence that changed how you think. Not for me, for you. Because awareness without action is wasted clarity. Now, let's begin with the first truth, the one that changes everything. Chapter 1, the lie you were taught about taxes. From the moment you earned your first paycheck, the pattern began. You worked, you got paid, and a portion was taken. No explanation, no strategy, no awareness, just deduction. And over time, something dangerous happened. You accepted it, not because you understood it, but because everyone around you did the same. Your parents accepted it. Your co-workers accepted it. Your friends accepted it. So you assumed this is just how life works. But here's the problem. When you accept something without understanding it, you give up control. And when it comes to money, lack of control is the most expensive mistake you can make. Think about this. You spend years learning how to earn money. You develop skills. You build experience. You chase promotions. But how much time have you spent learning how to keep money? How much time have you spent understanding the system that determines what stays and what goes? Most people, almost none. And that's where the gap begins. Because the system was never designed to treat everyone equally. It was designed to reward behavior. Let me say that again. The tax system does not reward people. It rewards actions. And if you don't know which actions are rewarded, you will unknowingly choose the ones that cost you the most. That's why two people earning the same income can end up with completely different financial outcomes. One keeps more, one loses more. Not because of luck, but because of structure. because one understands the game and the other is just playing by default. Now, here's where it gets even more interesting. The government doesn't hide this. In fact, they openly designed the system this way. Why? Because they want certain things to happen. They want businesses to grow. They want jobs to be created. They want housing to be built. They want investments to flow into the economy. And instead of forcing people, they incentivize them through taxes. That means every deduction, every credit, every advantage is not random. It's intentional. It's a signal, a quiet message that says, if you do this, we will reward you. But most people never learn to read that message, so they stay stuck in the same loop, work harder, earn more, pay more, and wonder why it never feels like enough. Now pause for a moment and ask yourself honestly, have you been playing the game or just following the rules you were given? Because there's a difference, a big one. One leads to control. The other leads to dependency. And this audiobook is about crossing that line. But here's the catch. Understanding this is uncomfortable because it forces you to question what you've believed for years. It forces you to admit that maybe the system isn't unfair. Maybe you just weren't taught how to use it. And that realization can either frustrate you or empower you. The choice is yours. Because in the next chapter, we're going to break down something even deeper. Something that separates the average earner from the strategic wealth builder. A shift so simple, but so powerful, that once you see it, you can't unsee it. The difference between earning money and building wealth. And trust me, they are not the same. Dear viewer, we now have over 150 videos on our channel. That's a huge number, and we want to thank you, our viewers and subscribers, so much for that. You inspire us to create great videos every time and choose the best topics for our audiobooks. If you haven't subscribed yet, now is the perfect time to do so. We have big plans for this channel. Thank you. Chapter 2. Income versus Wealth. The Invisible Divide. Most people spend their entire lives chasing income and never realize they're running in the wrong direction. They believe the answer is simple. Earn more, work harder, climb higher, and on the surface, it makes sense because income feels like progress. A bigger paycheck feels like growth. A promotion feels like success. A raise feels like you're winning. But let me ask you something. If income alone created wealth, why are so many high earners still stressed about money? Why do people making six figures still feel pressure every month? Why do some people earn more, yet keep less? There's something missing. And once you see it, you can't ignore it. Because income is not the same as wealth, not even close. Income is what you earn. Wealth is what you keep, protect, and multiply. And here's the dangerous part. You can increase your income and still move further away from wealth. That's the trap. Because as income grows, so do taxes. As income grows, so do expenses. As income grows, expectations rise. And before you know it, you're earning more than ever, but feeling just as stuck. That's not progress. That's a faster treadmill. Now here's the shift. Wealth builders don't just focus on how much they make. They focus on how money flows, where it goes, how it's taxed, how it's structured, because they understand something most people never learn. Money is not just earned, it is engineered. Let that sit with you. Because the moment you stop seeing money as something you get and start seeing it as something you design, everything changes. Think about two people. One earns $10,000 a month as an employee. The other earns $10,000 through structured assets, investments, and tax-advantage strategies. Same income, completely different outcome. The first person pays taxes before they even see their money. The second often controls when, how, and how much tax is applied. Same number, different system. And the system is everything. Now here's where it becomes real. Most people were taught to focus on stability, get a job, earn steady income, be safe. And there's nothing wrong with that. But no one taught them what happens next. No one explained how the structure of that income affects everything else. Because when your income is structured in the most taxed way, you will always be working harder than necessary. Not because you lack effort, but because your system is leaking. Imagine trying to fill a bucket with a hole in the bottom. You can pour faster, you can pour more, but until you fix the structure, you will never truly get ahead. That's what taxes do to most people. Not because taxes are bad, but because they never learned how to position themselves within the system. Now let's go deeper. Wealth builders ask different questions. They don't ask, how can I make more money? They ask, how can I keep more of what I make? How can I reduce friction? How can I align my actions with incentives? And those questions lead to completely different decisions. Because once you understand that the system rewards certain behaviors, you stop fighting it and start aligning with it. This is where power begins, not in working harder, but in thinking differently. Now I want you to reflect for a moment, not on your income, but on your structure. How is your money flowing right now? Where is it going? How much of it disappears before you even touch it? And more importantly, what if that could change? Because it can. Not overnight, not magically, but strategically. And that's what this journey is about. Not shortcuts, not loopholes, but awareness. Because awareness leads to better decisions, and better decisions lead to different outcomes. Now here's a line I want you to remember. Income makes you rich for a moment. Structure makes you rich for a lifetime. And in the next chapter, we're going to break down something that might challenge everything you believe about fairness. Something most people quietly feel, but rarely understand. Why it seems like the wealthy play by different rules, and whether that's actually true or just misunderstood. Because what you're about to discover might not make you angry. It might make you aware. Chapter 3. The Myth of Different Rules. You've probably heard it before. Maybe you've even said it yourself. The rich don't pay taxes. They have loopholes. The system is rigged. And on the surface, it feels true. Because when you see headlines, stories, or comparisons, it looks like two completely different worlds. One where people work hard, pay their share, and move slowly, and another where people seem to grow wealth faster, keep more money, and operate with less friction. So the natural conclusion becomes, they must be playing by different rules. But here's the truth that most people never stop to examine. They're not playing by different rules. They're playing by the same rules, just differently. And that difference is everything, because the system isn't hidden. It's written down. Thousands of pages of tax code, regulations, incentives, all publicly available. Nothing secret, nothing exclusive. But here's the catch. Just because something is available doesn't mean it's understood. And what you don't understand, you can't use. So while most people ignore the system, others study it. While most people react, others prepare. While most people accept outcomes, others design them. And over time, that gap grows, not because one group is smarter, but because one group is intentional. Now let's break this down in a simple way. Imagine a game. The rules are written in a book. Everyone has access to that book. But most players never read it. They just start playing. They guess. They react. They learn through mistakes. And then there's another group. They study the book. They understand the patterns. They recognize the rewards. They see the penalties before they happen. So when they play, they don't just move. They move with purpose. Same game, same rules, different results. That's exactly how the tax system works. Now here's where it becomes uncomfortable, because once you understand this, you lose the excuse. You can no longer say, I didn't know it was possible. Because now you're starting to see it. And awareness comes with responsibility. Responsibility to learn. Responsibility to question. Responsibility to act differently. And that's not easy, because most people don't want to feel like they've been playing the game blindly. But here's a better way to look at it. You weren't wrong. You were just uninformed. And there's a difference, because being wrong means failure. Being uninformed means opportunity. Opportunity to shift. Opportunity to grow. Opportunity to take control. Now let's go even deeper. The reason the system rewards certain people more is not because of who they are. It's because of what they do. Remember this. The system rewards contribution, not effort. Effort alone is not enough. Working harder does not automatically create better outcomes, because the system is not measuring how tired you are. It's measuring what value you're creating. And how. Are you creating jobs? Are you investing in growth? Are you building infrastructure? Are you solving problems at scale? These are the behaviors the system encourages. And when you align with those behaviors, you unlock advantages, not by cheating, not by hiding, but by participating in the system the way it was designed. Now think about your current path. What behaviors is it aligned with? What incentives are you triggering? Because every financial decision you make either moves you closer to those advantages or further away from them. There is no neutral, only direction. Now I want you to pause here, because this is a turning point, a mental shift. Instead of asking, why is the system unfair? Start asking, what is the system rewarding and how can I align with it? That one question can change everything, because it moves you from frustration to strategy, from emotion to awareness. And awareness is where control begins. Now, here's a line I want you to carry forward. The rules don't change for the wealthy. The wealthy change how they play. And in the next chapter, we're going to uncover something even more powerful: the hidden language of the tax system, the signals it sends, the clues it leaves behind, and how, once you learn to read it, you'll start seeing opportunities where you once saw limitations. Because the system is speaking. The question is, are you listening? Chapter 4. The hidden language of taxes. The system is speaking to you, not loudly, not clearly, not in a way most people notice, but it is speaking in every rule, in every deduction, in every credit. There is a message, a direction, a quiet instruction that says, if you move this way, you will be rewarded. But here's the problem. Most people don't see the language. They only see the outcome. They see taxes taken, but not why. They see deductions missed, but not how. They see others paying less, but not the path. Because the tax code is not written like a story. It's written like a map. And maps are useless if you don't know how to read them. Now let's simplify this. Imagine you're walking through a city you've never been to. There are signs everywhere, arrows, directions, symbols. Some people walk blindly. They guess, they wander, they get lost. Others, they read the signs. They follow the patterns. They understand the flow. Same city, different experience. That's what the tax system is, a landscape filled with signals. And once you learn to read those signals, you stop guessing. You start navigating. Now here's the key idea. Every tax benefit is a reward for a specific behavior, not random, not accidental, intentional. Let's break that down. Why do tax deductions exist? Because the system wants you to spend in certain ways. Why do tax credits exist? Because the system wants you to invest in certain outcomes. Why do some activities reduce taxes while others increase them? Because one aligns with the system's goals and the other doesn't. So the question becomes, what does the system want? And this is where everything starts to connect. The system rewards people who create jobs, build businesses, invest in housing fund innovation, support economic growth. Why? Because those actions benefit more than just the individual. They create ripple effects. They expand the economy. They move things forward. So instead of forcing people to do those things, the system incentivizes them. It says, if you take this path, we will reduce your burden. Not eliminate it completely, but reduce it significantly. Now here's the part most people miss. You don't have to be rich to follow these signals. You don't have to be a millionaire to start aligning your actions. You just need awareness, because even small shifts can create different outcomes. And over time, those outcomes compound. Now think about your current financial behavior. What are you being rewarded for? And more importantly, what are you not being rewarded for? Because if your actions are not aligned with incentives, you will always feel resistance. You will always feel like you're pushing harder than necessary. Not because you're doing something wrong, but because you're moving against the current. And moving against the current is exhausting. But when you align with it, everything becomes smoother, more efficient, more strategic. Now let's go deeper. There are 3 layers to this system, and understanding them changes how you see everything. Layer 1, income. This is where most people live, earn money, get taxed, repeat. It's the most visible layer and the most taxed. Layer 2, deductions and credits. This is where awareness begins. Reducing taxable income, applying strategies, making intentional decisions. Most people only scratch the surface here. Layer 3, structure. This is where wealth is built. How your money flows, how your activities are classified, how your financial life is designed. This is where the biggest shifts happen. Not because of tricks, but because of positioning. Because when your structure aligns with this system, you don't just reduce taxes. You change how they apply to you entirely. And that's the level most people never reach. Not because it's impossible, but because they were never taught to look there. Now pause for a moment and ask yourself, which layer are you operating in right now? Because wherever you are, there's another level above it, another way to think, another way to move. And this audiobook is about guiding you upward, step by step, without overwhelm, without confusion, just clarity. Now here's a line I want you to remember. The system doesn't hide opportunities. It hides them in plain sight. And in the next chapter, we're going to explore something that might shift your mindset even more. The idea that taxes are not just something you reduce, but something you can plan, control, even anticipate. Because once you stop reacting and start planning, you stop being surprised and start being strategic. And that's where real power begins. If you enjoy these audiobooks and want to support the channel, consider joining our private members community. Members get early access to new audiobooks and exclusive wealth lessons. Chapter 5. Stop reacting to taxes. Start planning them. Most people experience taxes the same way. Unexpected, uncomfortable, uncontrollable. They don't think about taxes until the moment arrives. A deadline, a bill, a number they didn't anticipate. And in that moment, they react. They scramble. They search for last-minute solutions. They hope for relief. But by then, it's already too late. Because taxes are not something you fix at the end. They are something you design from the beginning. Let that sink in. Taxes are not an event. They are a result of decisions you made months ago, even years ago. The structure you chose, the actions you took, the behaviors you followed, and if you only think about taxes when they show up, you've already lost control of the outcome. Now imagine a different approach. Instead of reacting, you anticipate. Instead of guessing, you plan. Instead of being surprised, you already know what's coming. That's how wealth builders operate. They don't wait for tax season. They build tax strategy into their everyday decisions because they understand one simple truth. You don't reduce taxes after you earn money. You reduce them while you earn it. That's the shift. And it changes everything. Now let's break this down in a real practical way. Every financial decision you make has a tax consequence. When you earn income, there's a structure. When you spend money, there's a classification. When you invest, there's a treatment. And each of those choices either increases your burden or reduces it. But if you're not aware of those consequences, you're making blind decisions. And blind decisions lead to expensive outcomes. Now, here's where planning comes in. Planning means you pause. You think ahead. You ask, if I do this, what happens next? Not just financially, but structurally, because a decision that looks good on the surface can have hidden costs underneath. And those hidden costs are where most people lose. Now, let's go deeper. There are two types of people when it comes to taxes. The first type looks backward. They say, what happened? What can I fix? What can I adjust now? The second type looks forward. They say, what am I about to do? How will this be treated? What structure makes the most sense before I act? Same situation, different mindset. And that mindset creates different outcomes. Because when you plan ahead, you give yourself options. You create flexibility. You open doors that don't exist at the last minute. Now, think about your own life. How often have you made a financial decision without thinking about its tax impact? Taking a job, starting a side income, making a purchase, investing in something new, not because you didn't care, but because no one taught you to think that way. And that's the gap. Not effort, not intelligence, just awareness. Because once you start thinking this way, everything slows down. In a good way, you become more intentional, more precise, more strategic. You stop chasing quick wins and start building long-term advantages. Now, here's something important. Planning doesn't mean perfection. You won't get every decision right. You won't foresee everything. But that's not the goal. The goal is direction. Because even a small shift toward awareness creates a completely different path over time. Now, imagine this. Two people earn the same income for 5 years. One reacts to taxes every year. The other plans ahead, adjusts their structure, aligns their actions, makes intentional moves. At the end of 5 years, who do you think keeps more? Who do you think has more flexibility? Who do you think feels more in control? That's the power of planning. Not dramatic, not flashy, but consistent. And consistency is what builds real wealth. Now, I want you to pause again and ask yourself honestly, have you been reacting or planning? Because that answer tells you exactly where you are, and more importantly, where you can go next. Now, here's a line I want you to carry forward. If you wait until tax season to think about taxes, you're already too late. And in the next chapter, we're going to uncover one of the most powerful shifts you can make. The difference between being an employee and becoming an owner in the eyes of the system. Because this is where the structure truly begins to change. And once you see it, you'll understand why some people move faster, with less resistance and more control. Chapter 6. Employee versus owner, the structure that changes everything. There is a line. It's invisible. No one announces it. No one formally teaches it. But once you cross it, everything about how money flows in your life begins to change. It's the line between being an employee and becoming an owner, not just in title, but in structure. Because in the eyes of the system, those two positions are treated very differently, and understanding that difference is one of the most powerful shifts you can make. Now, let's be clear. This is not about judging one path over another. Being an employee is stable. It's predictable. It provides security. But when it comes to taxes, it is also the most straightforward and often the most exposed to structure. Because as an employee, you earn first and pay immediately. Your income is visible, your taxes are automatic, your flexibility is limited. There is very little room to adjust, very little room to design. It's clean, but it's rigid. Now compare that to the mindset of an owner. An owner doesn't just earn money. They create a system around how money flows. They have choices. Choices about timing, choices about structure, choices about how income is classified. And those choices create flexibility. Now pause here, because this is where most people misunderstand. Becoming an owner doesn't mean you need a massive company. It doesn't mean you need employees or a big operation. It starts with a shift in thinking from receiving income to structuring income. Because the moment you step into ownership, even in a small way, you begin to see options that didn't exist before. Options to align your actions with incentives. Options to plan instead of react. Options to design instead of accept. Now think about this. Why does the system reward owners differently? Because owners create value beyond themselves. They take risks. They build systems. They contribute to growth. And because of that, they are given more tools, more flexibility, more opportunity to reduce friction. Again, not by breaking rules, but by operating within the system's design. Now, here's the shift you need to understand. Employees are paid after taxes are considered. Owners structure how taxes are applied before income is finalized. That difference is everything, because it changes when taxes are calculated. and how much control you have in that process. Now, let's bring this closer to your reality. You might be listening right now thinking, I'm not an owner. This doesn't apply to me. But that's not true, because ownership is not a switch. It's a spectrum. It can start small, a side activity, a freelance skill, a small investment, something that shifts you from pure income into structured income. And once that shift begins, you start seeing differently. You start asking different questions. You start noticing opportunities that were always there, but invisible before. Now here's where it gets powerful. You don't have to abandon stability to explore structure. You can build both, step by step, layer by layer, because the goal is not to replace your current path overnight. The goal is to expand it, to give yourself more control over time. Now think about your current position. Are you only earning, or are you beginning to structure? Because that answer determines how much flexibility you have moving forward. And flexibility is the foundation of strategy. Now here's a line I want you to remember. You don't build wealth by working harder inside a rigid system. You build it by creating flexibility within it. And in the next chapter, we're going to go even deeper into something that most people overlook. The power of changing your facts, not your effort, not your income, but the way your financial life is defined, because in the world of taxes, your outcome is not just based on what you do, but on how your situation is structured. And once you understand that, you'll realize something powerful. You may not need to do more. You may just need to do things differently. Chapter 7. Change your facts. Change your taxes. There's a phrase that quietly controls everything in the world of taxes. Most people have never heard it. And even if they have, they don't fully understand what it means. That phrase is simple. Taxes are based on your facts and circumstances. Let that sink in. Not your intentions, not your effort, not how hard you worked, your facts, your circumstances. That means your outcome is not fixed, it's not locked in, it's shaped. And if it's shaped, it can be changed. Now this is where most people get stuck. They believe their situation is permanent. I have this job. I earn this way. This is just how it is. So they accept the result. They accept the tax. They accept the outcome. But what they don't realize is that even small changes in their facts can create completely different results. Now let's break this down in a simple way. Imagine two people doing similar work. One is structured in a way that triggers higher taxes. The other is structured in a way that aligns with incentives. Same effort, same output, different facts, different outcome. That's the power of structure, because the system doesn't judge effort. It responds to facts. Now here's where it becomes powerful. You don't always need to work harder to change your outcome. Sometimes you just need to change your position. Change how your activity is defined. Change how your income flows. Change how your decisions are structured. And when you do, the system responds differently. Now let's go deeper. Think about your life right now. Your income, your work, your financial habits. These are your current facts. They create your current outcome. But here's the question. Are those facts fixed, or are they flexible? Because most people assume they're fixed, but in reality, many of them can be adjusted. Not overnight, not drastically, but gradually, strategically. And over time, those adjustments create a completely different picture. Now here's the shift. Instead of asking, how do I pay less taxes? Start asking, how can I change my facts so the system treats me differently? That question opens new doors because it moves you from reaction to design, from limitation to possibility. Now, here's an example mindset. Instead of focusing only on earning more income, you start thinking about how that income is structured. Instead of focusing only on what you spend, you start thinking about how those expenses are classified. Instead of reacting at the end, you start shaping decisions from the beginning. That's how facts begin to shift. And when facts shift, outcomes follow. Now let's make this even clearer. Imagine your financial life as a story. Right now, that story has a structure, characters, patterns, results, and taxes are just one part of that story. But if you change the structure of the story, the ending changes too. Not because you forced it, but because the direction shifted. Now here's the part most people overlook. Changing your facts doesn't require perfection. It requires awareness. Because once you see your situation clearly, you start noticing where adjustments are possible, where opportunities exist, where small changes can create long-term impact. And those small changes are where real power begins. Now pause here and reflect honestly. What are your current facts? How is your income structured? How are your financial decisions positioned? And most importantly, what could be adjusted? Because that question is the beginning of transformation. Now here's a line I want you to remember. You don't lower taxes by fighting the system. You lower them by changing how the system sees you. And in the next chapter, we're going to build on this idea even further. We're going to talk about something critical. The team. Because no matter how much you learn, there comes a point where knowledge alone is not enough. You need guidance. You need strategy. You need the right people around you. And choosing that team might be one of the most important financial decisions you ever make. Chapter 8. Your team determines your outcome. There comes a moment when doing everything alone stops working. Not because you're not capable, not because you're not intelligent, but because the game you're stepping into is bigger than individual effort. And this is where most people make a costly mistake. They try to figure everything out themselves. They search online. They piece together advice. They guess. And sometimes they get small wins. But over time, those guesses become expensive. Because when it comes to taxes and wealth structure, precision matters. Details matter. Timing matters. Execution matters. And without the right guidance, you're navigating a complex system with incomplete information. Now let's be clear, this is not about dependency. This is about leverage. Because the right team doesn't replace your thinking. It sharpens it. It challenges it. It expands it. And most importantly, it helps you avoid mistakes you didn't even know existed. Now think about this. Every successful person you've ever seen has a team. Not just employees, but advisors. People who see things they don't. People who specialize in areas they don't focus on. People who guide decisions behind the scenes. And when it comes to building tax-efficient wealth, that team becomes critical. Because this is not just about filing taxes, it's about strategy. And strategy requires foresight. Now here's the difference most people miss. There are two types of advisors. The first type looks backward. They record what already happened. They prepare documents. They report outcomes. They are important, but they operate in the past. The second type looks forward. They ask questions. They plan scenarios. They guide decisions before they happen. They are strategic. And that difference is everything. Because one helps you stay compliant. The other helps you stay ahead. Now ask yourself honestly, which type have you been relying on? Because if your entire financial approach is based on looking backward, you will always be reacting, always adjusting after the fact, always trying to fix what already happened. But when you shift to forward thinking, you start designing outcomes. And that's where control begins. Now here's something important. Finding the right team is not about titles. It's not about choosing someone just because they have credentials. It's about alignment. Do they think strategically? Do they ask the right questions? Do they help you see beyond the obvious? Because the right advisor doesn't just tell you what to do. They help you understand why. They teach you how to think. They expand your awareness. And over time, you become sharper. Because of it? Now let's go deeper. Why is this so important? Because as your financial life grows, complexity increases. More income streams, more decisions, more moving parts. And without the right guidance, complexity becomes risk. But with the right team, complexity becomes opportunity. Because they help you see connections. They help you structure decisions. They help you align your actions with long-term strategy. Now here's the truth most people avoid. Trying to save money by avoiding the right guidance often costs more in the long run. Because mistakes in structure are not always visible immediately. They show up later in missed opportunities, in higher taxes, in limited flexibility, and by the time you realize it, you're already behind. Now pause here and think about your current situation. Who is guiding your financial decisions? Who is helping you plan ahead? Who is challenging your thinking? Because if the answer is no one, or only at the end, then there is a gap. And that gap is where opportunity is being lost. Now, here's the shift. You don't need to know everything, but you do need to know who to ask. Because asking the right questions to the right people at the right time changes everything. Now, here's a line I want you to remember. You don't build tax-free wealth alone. You build it with the right minds around you. And in the next chapter, we're going to move into something even more practical. The idea of deductions, but not the way most people think about them, not as last-minute tricks, but as intentional tools. Tools that, when used correctly, become part of your everyday strategy. Because once you understand how deductions really work, you stop seeing them as small benefits and start seeing them as building blocks. Hey there, we want to remind you that we often choose topics suggested by you, our viewers, in the comments. In the comments, you can suggest a topic or ask a question about what you'd like to see in our video. We read every comment carefully, so we promise not to miss a single one. Thank you. Let's keep going. Chapter 9. Deductions. The tool most people misuse. When most people hear the word deduction, they think small. They think, maybe I can save a little. Maybe I can reduce something at the end of the year. It feels like a bonus, an afterthought, something you look for when it's already too late. But that mindset is exactly why most people never benefit from deductions the way they should. Because deductions are not a last-minute trick. They are a strategy. They are a tool. And when used correctly, they become part of how you design your financial life, not just how you adjust it. Now, let's simplify this. A deduction reduces the amount of income that gets taxed. That's the basic definition. But the real power is not in what it does. It's in how you use it. Because a deduction is not about randomly spending money just to reduce taxes. That's a mistake, a costly one. Because spending $1 to save a fraction is not strategy. It's reaction. Real strategy is different. Real strategy asks, am I already doing something that aligns with the system? Can I structure this activity in a way that reduces my burden? Can I turn necessary actions into tax-efficient ones? That's the shift. From forced spending to intentional positioning. Now here's where most people go wrong. They chase deductions without understanding them. They hear about something, they try to apply it quickly, they focus on the short-term benefit. But they miss the bigger picture because deductions only work when they align with real activity, real purpose, real structure, and without that alignment, they become noise. Now, let's go deeper. Think about your daily life. You already spend money on tools, on learning, on growth, on things that help you move forward. But the question is, how are those actions being treated? Are they just expenses, or are they structured in a way that aligns with incentives? Because the difference is not what you do, it's how it's positioned. Now here's a powerful idea. The goal is not to create deductions. The goal is to recognize and structure them. Let that sit with you. Because once you understand this, you stop forcing behavior. You start refining it. You start asking, what am I already doing that could be optimized? How can I align this with the system? How can I make my actions more efficient? And over time, those questions lead to better decisions, more clarity, more control. Now let's talk about mindset. Most people see deductions as small wins, little reductions, temporary relief. But wealth builders see them differently. They see them as part of a larger system, a system where every decision connects, every action matters, every structure builds on the next. Because when deductions are used intentionally, they compound, not just financially, but strategically. Now imagine this. Two people live similar lives. They spend on similar things. They invest in similar growth. But one understands how to structure those actions. The other doesn't. Over time, who benefits more? Who keeps more? Who moves forward with less friction? That's the difference awareness creates. Not more effort, not more income, just better positioning. Now pause here and reflect honestly. How have you been thinking about deductions? As something you chase at the end, or something you build into your decisions from the beginning? Because that answer reveals your current approach and, more importantly, your opportunity. Now here's the shift. Stop asking, what can I deduct? Start asking, how can I structure my actions so they naturally align with deductions? That question changes everything because it moves you from reaction to design, from guessing to strategy. Now here's a line I want you to remember. Deductions don't make you wealthy. Strategic decisions that create deductions do. And in the next chapter, we're going to take this even further. We're going to talk about something powerful and often misunderstood. Depreciation. A concept that sounds complex, but once understood, becomes one of the most impactful tools in building tax-efficient wealth. Because sometimes the system rewards you, not for what you earn, but for what you own. And that shift opens a completely new level of thinking. Chapter 10. Depreciation, getting rewarded for what you own. There's a moment when people first hear about this concept, and it doesn't make sense. It sounds almost unreal. How can you own something, watch it increase in value, and still reduce your taxes because of it? It feels backwards. But that's exactly what depreciation introduces, a completely different way of thinking. Because up until now, you've been conditioned to believe one thing. You earn money, and then you get taxed. But depreciation flips that idea. It introduces a world where what you own can influence how much you're taxed, even if you're not actively earning from it in the traditional way. Now let's slow this down, because this is important. Depreciation is the idea that certain assets lose value over time, at least on paper. And because of that, the system allows you to account for that loss, even if the real-world value tells a different story. Now here's where it becomes powerful, because not all assets behave the same. Some assets, while technically depreciating on paper, are actually holding value, or even increasing in value in reality. And when you understand that difference, you begin to see opportunity, not by manipulating anything, but by aligning with how the system views ownership. Now pause here, because this is a shift in perspective. You move from thinking only about income to thinking about assets, what you own, how it behaves, how it's treated. Because ownership opens doors that income alone cannot. Now let's make this practical. Most people focus entirely on earning. They build income streams. They work harder. They increase their pay. But they rarely think about how ownership can support that income, how assets can create advantages, how structure can reduce friction, and that's where the gap begins. Because when you combine income with strategic ownership, you create balance, you create leverage, you create a system that works for you instead of against you. Now here's the mindset shift. Income is active. Assets are strategic. Income requires effort, time, energy, consistency. Assets, when structured correctly, can create advantages in the background. They don't replace effort, but they support it. They enhance it. They make it more efficient. Now imagine this. Two people earn the same income. One relies only on that income. The other begins to build ownership. Assets that align with the system. Assets that are treated differently. Assets that create flexibility. Over time, who has more control? Who has more options? Who has more ways to manage their financial outcome? That's the difference. Not overnight, but over time. Now here's where most people get stuck. They hear about concepts like depreciation, and they feel overwhelmed. It sounds technical, complex, out of reach. But remember this, every complex idea becomes simple once you understand the principle behind it. And the principle here is clear. The system rewards ownership, not just effort, not just income, ownership. Because ownership creates value beyond the individual. It contributes to the bigger picture. And because of that, it is treated differently. Now here's something important. This is not about rushing into decisions. It's not about chasing assets blindly. It's about awareness, understanding what exists, understanding how it works, understanding how it fits into your long-term strategy. Because when you have that awareness, you make better decisions. You avoid mistakes. You move with intention. Now pause again and reflect. What do you currently own? Not just physically, but financially. And how is it being treated? Because that question opens a new layer of thinking, a new level of awareness. Now here's a line I want you to remember. The wealthy don't just earn money. They position what they own to reduce what they owe. And in the next chapter, we're going to go even further into something that builds on this idea, something that connects ownership with long-term strategy. Real estate, one of the most talked about and most misunderstood paths to tax-efficient wealth. But not in the way most people think, because this is not about hype. It's about structure, and once you understand that, you'll see why this path has been used for generations and how it fits into everything you've learned so far. Chapter 11, Real Estate, the system's favorite playground. There are certain paths that the system quietly favors. Not loudly, not obviously, but consistently. And if you study the patterns, if you look closely enough, one of those paths becomes impossible to ignore. Real estate. Not because it's trendy, not because everyone talks about it, but because of how deeply it aligns with what the system wants. Think about it. Housing is essential. Communities depend on it. Economies grow through it. So what does the system do? It encourages it through incentives, through structure, through advantages that go far beyond what most people realize. Now let's be clear. This is not about telling you to rush into real estate. It's about understanding why it's treated differently. Because once you understand the why, you can decide the how. Now let's break this down. Real estate sits at the intersection of multiple benefits: ownership cash flow, depreciation, long-term appreciation. And when these elements combine, they create a unique environment, an environment where you can earn and reduce at the same time. Now pause here, because this is where it becomes powerful. Most people think in straight lines. Earn to pay taxes, to keep what's left. But real estate introduces layers. Earn to offset, to structure, to grow. It's not just about income, it's about interaction. How different elements work together. Now here's a key idea. Real estate is not just an investment. It's a system within the system. Let that sit with you. Because once you see it this way, you stop looking at it as a single move and start seeing it as part of a bigger strategy. Now, let's go deeper. Why does the system reward real estate so strongly? Because it solves real problems. It provides housing. It creates jobs. It supports communities. And because of that, the system offers incentives to those who participate, not as a favor, but as a trade. You contribute to this area. We reduce your burden. That's the exchange. Now think about your current financial path. Is it aligned with those incentives, or is it moving in a completely different direction? Because alignment is where efficiency begins. Now, here's where many people get it wrong. They focus only on the surface, buying property, collecting rent, waiting for value to increase. But they ignore the structure behind it, how it's held, how it's managed, how it's integrated into a larger strategy. And without that structure, they miss the deeper benefits. Because, again, it's not just about what you do, it's about how it's positioned. Now imagine this. Two people invest in similar properties. One understands structure, the other doesn't. Over time, who benefits more? Who reduces more friction? Who builds more flexibility? That's the difference awareness creates. Not luck, not timing, just understanding. Now here's something important. Real estate is not the only path, but it is one of the clearest examples of how the system rewards alignment. And when you study it, you begin to understand the bigger picture. You begin to see patterns. You begin to recognize opportunities in other areas. Because once your thinking shifts, it applies everywhere. Now pause again and reflect. When you think about wealth, are you only thinking about income? Or are you starting to think about systems? Because that shift is everything. Now here's a line I want you to remember. Wealth is not built on one stream. It's built on systems that support each other. And in the next chapter, we're going to expand even further beyond real estate into something that shapes long-term strategy in a powerful way. Investing. But not just investing for returns, investing for positioning, because the way you invest can change not only how much you earn, but how much you keep. And once you understand that connection, you stop chasing returns and start designing outcomes. Dear viewers, write which city you're from. It's interesting to see which corners of the world are watching our videos. Chapter 12. Investing. Not just for returns, but for positioning. Most people think they understand investing. Buy low, sell high, make a return. Simple. At least, that's what it looks like on the surface. But if that's all investing was, then why do so many people invest and still feel like they're not getting ahead? Why do some people see growth, but still feel the pressure of taxes eaten into their gains? Because they're only seeing half the picture. They're chasing returns, but ignoring positioning. And that difference is what separates average investors from strategic wealth builders. Now let's slow this down, because this is where things begin to connect. Investing is not just about what you earn. It's about how that earning is treated, how it flows, how it's taxed, how it fits into your overall structure. Because two investments with the same return can produce completely different outcomes. Not because of performance, but because of positioning. Now here's the shift. It's not just about how much your money grows, it's about how efficiently it grows. Let that sit with you. Because efficiency is where strategy lives. Now think about this. You invest your money, it grows. You feel good. But then a portion is taken, and depending on how that investment was structured, that portion can be significant. Not because the system is unfair, but because the structure wasn't optimized. Now imagine a different approach. Before you invest, you ask, how will this be treated? What structure supports this? How does this fit into my long-term plan? That's positioning, that's strategy, and that's where real power begins. Now let's go deeper. There are different types of income in the world of investing. Some are taxed one way, some are taxed another. Some offer flexibility, some don't. And understanding these differences allows you to make smarter decisions, not just based on return, but based on outcome. Because a higher return with higher friction can sometimes leave you with less than a lower return with better structure. That's the part most people overlook. Now pause here and reflect. When you think about investing, what's your focus? Is it just the return? Or are you considering the full picture? Because once you expand your thinking, your decisions change. You stop chasing what looks good and start choosing what works better. Now, here's something important. This is not about avoiding taxes completely. It's about reducing unnecessary friction. It's about aligning your actions with how the system is designed. Because when you align, you don't have to fight. You don't have to guess. You move with clarity. Now imagine this. Two people invest the same amount of money. They achieve similar returns. But one understands positioning. They structure their investments intentionally. They plan ahead. They integrate everything into a system. The other just focuses on the numbers. At the end of the journey, Who keeps more? Who has more flexibility? Who has more control? That's the difference, not in effort, not in intelligence, but in awareness. Now here's the deeper truth. Investing without strategy is like building without a blueprint. You might make progress, but it won't be efficient. It won't be optimized, and over time, those inefficiencies add up. Now let's bring this back to you. Look at your current approach. How are you investing? What are you prioritizing? And more importantly, how is it positioned? Because those answers reveal your next level of growth. Now here's a line I want you to remember. Smart investing grows your money. Strategic investing protects and multiplies what you keep. And in the next chapter, we're going to explore something that ties everything together, a concept that shapes long-term wealth in a powerful way. Tax-deferred growth. The idea that sometimes it's not about avoiding taxes completely, but about controlling when they happen, because timing is one of the most underrated tools in wealth building, and once you understand it, you stop thinking short-term and start playing a longer, smarter game. Chapter 13, Tax-Deferred Growth, the power of time and control. There is a hidden advantage that most people overlook, not because it's complicated, but because it doesn't feel immediate. It doesn't give you a quick win. It doesn't create instant excitement. But over time, it becomes one of the most powerful forces in wealth building. That advantage is control over timing, more specifically, when taxes happen. Because here's the truth. It's not just about how much tax you pay. It's about when you pay it. And that difference can change everything. Now let's slow this down. Most people operate on a simple cycle. Earn money, pay taxes, keep what's left. And that cycle repeats again and again. But what if you could delay part of that process? What if, instead of paying taxes immediately, you could allow your money to grow first? What if time itself became an advantage? That's what tax-deferred growth introduces. Now, here's the shift. Money that is not immediately reduced by taxes has more power to grow. Let that sink in. Because growth compounds. And the more you have working, the faster that growth accelerates. Now imagine two paths. In the first path, you earn money. A portion is taken. You invest what remains. It grows, but from a smaller base. In the second path, you earn money. You structure it in a way that delays taxation. You invest a larger amount. It grows from a bigger base. Over time, that difference becomes massive, not because of luck, but because of timing. Now, here's where it gets deeper. Tax deferral is not about avoiding responsibility. It's about managing it. It's about choosing when the impact happens. Because when you control timing, you control flow. And when you control flow, you create flexibility. Now think about this. Would you rather pay taxes today on money that could grow for years, or later, after that money has had time to expand? That's the strategic question. And once you start thinking this way, your entire approach shifts. Now here's something important. Tax deferral is not infinite. It's not about never paying. It's about planning. Because there may come a time when taxes are due. But by then, you've already gained an advantage. Your money has grown. Your position has improved. Your options have expanded. And that changes everything. Now, let's go deeper. Why is this so powerful? Because time is the one factor you can't replace. You can earn more money. You can adjust your strategy. But time, once lost, is gone. So when you combine time with smart structure, you create leverage. You create a system where growth works for you instead of being reduced too early. Now imagine this. Two people invest consistently over 10 years. One pays taxes along the way. The other defers strategically. At the end of that period, who has more working capital? Who has more flexibility? Who has more options moving forward? That's the impact of timing, not dramatic in the beginning, but powerful over time. Now pause here and reflect. Have you been thinking about taxes only as a cost, or are you starting to see them as something you can manage? Because that shift is where strategy begins. Now here's another layer. Tax-deferred growth is not just about numbers. It's about mindset. It trains you to think long-term, to delay gratification, to build systems that work over time. And that mindset extends beyond taxes. It influences how you invest, how you plan, how you make decisions. Because once you start thinking long-term, you stop chasing short-term wins. You start building lasting results. Now here's a line I want you to remember. Wealth is not just built by what you earn, but by how long you allow it to grow before it's reduced. And in the next chapter, we're going to take this even further into something even more powerful. The idea of tax-free growth, not just delaying taxes, but creating situations where certain gains are not taxed at all. Because once you understand that possibility, you begin to see a completely different level of strategy, a level where structure becomes your greatest advantage. Chapter 14, Tax-Free Growth. When the system rewards you completely, there is a level beyond deferral, a level that most people never even consider because they've been conditioned to believe one thing: you will always pay taxes. And while that's true in many situations, it's not true in all of them. Because within the system, there are pathways, specific intentional pathways where certain gains can become completely tax-free. Now pause, because this is where most people react emotionally. That can't be real. That must be a loophole. That sounds risky. But remember what you've learned so far. The system does not reward randomness. It rewards alignment. So if something is treated as tax-free, there is always a reason behind it, a behavior being encouraged, a direction being supported. Now here's the shift. Tax-free growth is not about escaping the system. It's about aligning with its highest incentives. Let that sink in. Because this is not about avoiding responsibility. It's about understanding where the system places its strongest rewards. Now, let's break this down. There are situations where the system says, if you follow this path, we will not reduce your gain. Why? Because that path supports long-term stability, growth, contribution. It encourages patience. It rewards discipline. It aligns with goals that go beyond short-term profit. And because of that, the system steps back. Now think about that. Not reducing your gain, allowing it to grow, letting it remain intact. That's a completely different experience. And once you understand that possibility, your thinking expands. You stop assuming limits. You start looking for alignment. Now, here's where it becomes powerful. Tax-free growth is not just about one strategy. It's about awareness, knowing that these paths exist, understanding the principles behind them, and recognizing where they might fit into your life. Because again, this is not about rushing, it's about positioning. Now imagine this. Two people build wealth over time. One focuses only on income and basic investing. The other learns to identify opportunities, where growth can be protected, not just deferred, but preserved. At the end of the journey, who has more? Who keeps more of what they built? Who benefits from the full power of compounding? That's the difference. Not in effort, not in intelligence, but in awareness. Now let's go deeper. Why doesn't everyone know this? Because most people never look beyond the surface. They accept the default path. They don't question structure. They don't explore alternatives. And because of that, they miss opportunities that were always available, not hidden, just unnoticed. Now pause here and reflect. What have you assumed about taxes your entire life? That they are fixed? That they are unavoidable? That they are always applied the same way? Because those assumptions limit your thinking. And when your thinking is limited, your options are limited. But once you start questioning, once you start exploring, everything opens up. Now here's something important. Tax-free growth is not about doing less. It's about doing things differently. It's about aligning your actions with long-term incentives. It's about building with intention, because when you do that, the system responds. Now here's a line I want you to remember. The highest level of strategy is not just reducing taxes, it's creating situations where they don't apply at all. And in the next chapter, we're going to bring everything together. We're going to talk about integration, because knowing these ideas individually is powerful, but combining them, that's where transformation happens, because wealth is not built from one strategy. It's built from systems that work together. And once you learn how to connect them, you stop thinking in pieces and start thinking in architecture. Chapter 15, Integration, where strategy becomes power. Up until now, you've been collecting pieces, ideas, concepts, shifts in thinking, each one powerful on its own. But here's the truth most people never reach. Wealth is not built from isolated ideas. It's built from integrated systems. Let that sit with you, because knowing about deductions is useful. Understanding depreciation is powerful. Learning about tax deferral is strategic. But when you connect them, when you align them, when they start working together, that's when everything changes. That's when strategy becomes power. Now imagine this. Instead of thinking, what can I do right now to save on taxes? You start thinking, how does everything in my financial life connect? Your income, your investments, your ownership, your decisions, all part of one system, all influencing each other. And once you see it that way, you stop making isolated moves. You start building architecture. Now here's the shift. The goal is not to use strategies. The goal is to design a system where strategies work together. Because when strategies are disconnected, they create friction. But when they are aligned, they create flow. Now let's break this down. Think of your financial life like a machine. Each part has a function. Income generates cash. Investments create growth. Assets provide leverage. Structure reduces friction. Individually, they work, but together, they amplify. Because each part supports the others. Each decision strengthens the system. Now here's where most people fall short. They focus on one area. They try one strategy. They expect results. But without integration, the impact is limited, because real growth comes from connection, from alignment, from building something that works as a whole. Now imagine this. You earn income. That income is structured intentionally. Part of it flows into investments. Those investments are positioned strategically. Some create growth, some create advantages. some support long-term goals, and all of it is aligned with a plan, not random, not reactive, designed. That's integration. Now pause here, because this is a turning point. You are no longer thinking like someone trying to save on taxes. You are thinking like someone building a system, and that shift changes everything. Now let's go deeper. Integration is not about complexity, it's about clarity. Because when everything is connected, you see the full picture. You understand cause and effect. You recognize patterns, and you make decisions with confidence, not guesswork. Now think about your current situation. Are your financial decisions connected, or are they separate? Do your investments align with your income? Does your structure support your goals? Or are you moving in different directions without realizing it? Because disconnection creates inefficiency, and inefficiency costs you over time. Now here's the powerful part. You don't need to fix everything at once. Integration happens step by step, one decision at a time, one adjustment at a time. But each step moves you closer to a system that works. Now here's a line I want you to remember. Wealth is not a result of one smart move. It's the outcome of many connected decisions. And in the next chapter, we're going to explore something deeper, something that sits underneath everything you've learned so far. Behavior. Because no strategy works without the right mindset behind it, and no system holds without discipline to support it. Because at the end of the day, your results are not just shaped by what you know, but by what you consistently do. And that's where the real work begins. Chapter 16, Behavior, the foundation of every strategy. You can learn every strategy. You can understand every concept. You can see every opportunity, but none of it matters if your behavior doesn't support it. Because at the core of everything, beneath the systems, the structures, the strategies, there is one thing that determines your outcome: what you consistently do, not what you know, not what you plan, not what you intend, what you actually do over and over again. Now let's be honest. Most people don't fail because they lack information. They fail because they don't apply it consistently. They learn something new. They feel motivated. They start strong. And then life happens. Distractions return. Old habits take over. Comfort wins. And slowly, they drift back to where they started. Not because they couldn't succeed, but because they didn't sustain the behavior. Now pause here, because this is important. Strategy without discipline is wasted knowledge. Let that sink in. Because everything you've learned so far only becomes real when it turns into action. And action is driven by behavior. Now here's the shift. Instead of focusing only on what you need to learn, start focusing on how you need to act. Because knowledge gives you direction, but behavior creates results. Now let's go deeper. What kind of behavior supports tax-efficient wealth? Clarity, consistency, intentionality. Not perfection, not extreme effort, just consistent, intentional movement. Because small actions, repeated over time, create massive change. Now think about this. If you make one better financial decision this week, it might not feel significant. But if you make one better decision every week for a year, that's 52 improvements. And those improvements compound, not just financially, but mentally. You become sharper, more aware, more in control. Now here's where discipline comes in. Discipline is not about being perfect. It's about showing up, even when it's inconvenient, even when it's uncomfortable, even when no one is watching. Because real growth happens in those moments. The quiet ones, the consistent ones, the ones that don't feel exciting, but build something powerful over time. Now let's bring this back to your journey. You've started to see the system differently. You've begun to understand structure. You've explored new ways of thinking. But now the question is, what will you do with it? Because awareness without action fades. It disappears. It becomes just another idea that never turned into change. But action, even small action, locks it in. It makes it real. Now here's something important. You don't need to change everything at once. In fact, trying to do that usually leads to failure. What you need is momentum, one step, then another, and over time, those steps build a new direction. Now pause again and ask yourself honestly, what is one behavior you can change starting today? Not tomorrow, not next week. Today. Something small, something realistic, something you can repeat. Because that's where transformation begins. Not in big moments, but in small, consistent actions. Now here's a line I want you to remember. You don't build wealth through knowledge alone. You build it through disciplined behavior applied over time. And in the next chapter, we're going to explore something deeper, something that shapes your behavior at its core, your mindset, because how you think about money, how you perceive opportunity, how you respond to challenges, all of it influences your actions. And your actions shape your results. Because before you change your finances, you have to change your thinking. And that's where we're going next. Chapter 17, Mindset. The way you think about money controls everything before strategy, before structure, before any financial decision you make. There is something deeper, something invisible, but incredibly powerful. Your mindset, because the way you think about money determines how you use it, how you react to it, how you protect it, how you grow it, and most importantly, how much of it you keep. Now here's the truth. Most people never realize you don't rise to wealth by accident. You grow into it through mindset. Let that sink in, because if your thinking stays the same, your results will repeat. Even if your income increases, even if your opportunities expand, even if your environment changes. Because mindset is the filter through which everything passes. Now let's be honest. Most people were not taught to think about money strategically. They were taught to survive, earn, spend, save what's left. That's it. No deeper awareness, no structural thinking, no long-term vision. And because of that, they approach money emotionally, reactively. They feel stress when taxes come. They feel pressure when expenses rise. They feel relief when income increases. But they rarely feel control, because control requires a different way of thinking. Now here's the shift. Wealth builders don't react to money. They direct it. They don't wait for things to happen. They plan, they anticipate, they move with intention. And that all starts in the mind. Now let's go deeper. There are two mindsets when it comes to money. The first is reactive. What do I have? What do I owe? What can I do right now? It's short term. It's focused on immediate needs. It's driven by pressure. The second is strategic. What is the system? How do I position myself within it? What decisions today create better outcomes tomorrow? It's long-term, it's calm, it's intentional, and that mindset creates space. Space to think, space to plan, space to act with clarity. Now think about your current approach. Which mindset have you been operating in? because that answer explains your current results. And more importantly, it reveals your next step. Now here's something powerful. Mindset is not fixed. It's not something you're born with. It's something you build through awareness, through learning, through repetition. Because every time you choose to think differently, you strengthen that pattern. You train your mind to operate at a higher level. Now let's bring this back to taxes. Most people see taxes as a loss, a burden, something to avoid or complain about. But a strategic mindset sees something different. It sees signals, opportunities, clues about how the system works. Because once you stop seeing taxes as an enemy, you start seeing them as information. Information that tells you what is being rewarded, what is being discouraged, how can I align differently? And that shift changes everything. Now here's the deeper truth. Your financial life improves the moment your thinking becomes intentional. Not perfect, not advanced, just intentional. Because intention leads to awareness. Awareness leads to better decisions. And better decisions create better outcomes. Now pause here and reflect honestly. How do you currently think about money? Is it something you chase? Something you react to? Something you feel controlled by? Or is it something you are beginning to understand? Something you are starting to direct? Because that shift is the beginning of control. Now here's a line I want you to remember. Before you master money, you must master the way you think about it. And in the next chapter, we're going to bring this journey even closer to reality. We're going to talk about implementation, because ideas are powerful, mindset is critical, but at some point, you have to move. You have to take what you've learned and apply it, step by step, decision by decision, because that's where transformation becomes visible, and that's where your new financial story truly begins. Chapter 18, Implementation, where knowledge becomes reality. There comes a moment when learning is no longer enough, when thinking is no longer enough, when understanding is no longer enough, because everything you've heard so far only matters if it turns into action. And this is where most people stop, not because they don't want change, but because action feels uncertain. What if I do it wrong? What if I don't understand everything yet? What if I'm not ready? So they wait, they delay. They tell themselves they'll start later. But here's the truth. Clarity does not come before action. It comes from action. Let that sink in, because waiting until you feel fully ready is the fastest way to stay exactly where you are. Now, this doesn't mean rushing blindly. It doesn't mean making reckless decisions. It means starting intentionally, step by step, with awareness. Now let's break this down. Implementation is not about doing everything at once. It's about doing the right things in the right order, and more importantly, doing them consistently. Now here's the shift. You don't need a perfect plan. You need a starting point, because once you start, you learn, you adjust, you refine, and over time, your strategy becomes clearer. Now imagine this. Instead of trying to change your entire financial life overnight, you focus on one area, one decision, one shift. Maybe it's how you think about your income. Maybe it's how you approach your next investment. Maybe it's simply asking better questions before making a decision. That's where implementation begins, not in complexity, but in clarity. Now here's something important. Action builds confidence, not the other way around. Most people think they need confidence to act, but in reality, Confidence comes from taking action, from seeing progress, from proving to yourself that you can move forward. Now let's go deeper. There are 3 stages of implementation. Stage 1, awareness. You see things differently. You understand concepts. You begin to question your current approach. Stage 2, action. You apply small changes. You test ideas. You begin to shift your behavior. Stage 3, integration. Your actions become habits. Your habits become systems, and your systems create consistent results. Most people stay stuck in stage 1. They learn, they understand, but they never move. And without movement, nothing changes. Now pause here and ask yourself honestly, where are you right now? Are you still in awareness, or are you ready to move into action? Because that decision is what separates potential from progress. Now here's the key. You don't need to know everything to start. You just need to know enough to take the next step, and that step creates momentum. Now imagine this. You take one action this week, then another next week, then another. Over time, those actions build something real, something measurable, something that changes your direction. That's how transformation happens. Not in one big moment, but in consistent movement. Now here's something powerful. Every action you take sends a signal to yourself, to your environment, to your future. It says, I am no longer passive. I am no longer reacting. I am taking control. And that shift changes how you see everything. Now here's a line I want you to remember. Knowledge gives you the map. Action is what moves you forward. And in the next chapter, we're going to explore something that keeps most people from ever reaching this level. Fear, the hesitation, the doubt, the uncertainty that shows up right when you're about to move. Because understanding fear is the final barrier between where you are and where you could be. And once you learn how to move through it, there is nothing left holding you back. Chapter 19, Fear, the invisible barrier to wealth. Right at the edge of change, right at the moment when everything starts to make sense, something appears, quiet, subtle, but powerful enough to stop most people in their tracks. Fear, not loud fear, not panic, but hesitation, doubt. That small voice that whispers, what if this doesn't work? What if I make a mistake? What if I lose money? And because of that voice, people pause, they delay, they retreat back into what feels safe, back into what's familiar, even if that familiar path isn't leading them anywhere new. Now let's be honest. Fear is not the enemy. It's natural. It's part of growth. Every time you step into something unfamiliar, fear will show up. That's not weakness, that's awareness. But here's the difference. Most people listen to fear. Wealth builders learn to move with it. Let that sink in. Because fear doesn't disappear. It evolves. And the goal is not to eliminate it. The goal is to understand it and move anyway. Now, let's break this down. Why does fear show up when you start thinking differently about money? Because you're stepping outside the default path. You're questioning what you've always accepted. You're considering new ways of operating. And your mind wants to protect you. It wants to keep you safe. So it creates doubt. It creates hesitation. It pulls you back toward what feels certain, even if that certainty is limiting. Now here's the shift. Fear is not a signal to stop. It's a signal that you're entering new territory, and new territory is where growth happens. Now think about this. Every person who has ever built something meaningful has felt uncertainty. Every person who has ever stepped into a new level has faced doubt. But the difference is they didn't wait for fear to disappear. They moved forward while it was still there. Now let's go deeper. There are different types of fear when it comes to money. Fear of making a mistake, fear of losing what you have, fear of looking foolish, fear of not understanding everything, and all of them create the same result: inaction. But here's the truth. Inaction is the most expensive decision you can make, because while you're waiting, nothing changes. Your structure stays the same. Your outcomes stay the same. Your opportunities stay out of reach. Now imagine this. You feel uncertain, but instead of stopping, you take one small step. You learn something new. You apply something small. You move forward carefully. And suddenly, the fear becomes smaller, not because it disappeared, but because you proved to yourself that you can move through it. Now that's power, not confidence, not certainty, but movement. Now here's something important. You don't need to eliminate risk. You need to understand it. Because risk is part of every decision, but informed risk is very different from blind risk. And that's what this journey has been about. Awareness, understanding, clarity, so that when you move, you do it with intention. Now pause here and reflect honestly. What has been holding you back? Not externally, but internally. What thought, what doubt, what hesitation has kept you in the same place? Because once you name it, you reduce its power, and once you move despite it, you break its control. Now, here's the deeper truth. Fear protects your comfort. Action builds your future. And you cannot have both at the same level. At some point, you have to choose. Now imagine your future self, the version of you who understands the system, who makes intentional decisions, who builds structure, who moves with clarity. That version of you is not fearless. They just don't let fear decide. Now, here's a line I want you to remember. The moment you act despite fear, you step into control. And in the next chapter, we're going to explore something that solidifies everything you've learned. Consistency. Because one action is powerful, but repeated action, that's what creates transformation. That's what builds momentum. That's what turns knowledge into results. And once you understand how to sustain that consistency, you don't just change your direction, you change your entire trajectory. Chapter 20. Consistency, the multiplier of every strategy. One action can change your direction, but only consistency can change your life. Let that sit with you, because everything you've learned so far, every idea, every shift, every realization means nothing without repetition, without showing up again and again and again. Not when you feel like it, not when it's convenient, but consistently. Now let's be honest. Consistency is not exciting. It doesn't feel dramatic. It doesn't create instant results. But over time, it becomes unstoppable. Because while others start and stop, while others lose focus, while others drift back into old patterns, the consistent person keeps moving. And that movement creates momentum. Now, here's the shift. Consistency turns small actions into massive outcomes. Because what you do once barely matters. But what you do repeatedly defines everything. Now think about this. If you improve your financial decisions by just a small percentage, but you do it every week, every month, every year, what happens? You compound not just money, but awareness, confidence, control. Now let's go deeper. Why do most people struggle with consistency? Because they rely on motivation, and motivation comes and goes. It's emotional, unstable, unpredictable. But consistency is not built on motivation. It's built on discipline. And discipline is a decision, a quiet one, a daily one. The decision to show up even when you don't feel like it, even when results are slow, even when no one notices, because you understand something deeper. Progress is happening, even when it's invisible. Now imagine this. You make one better financial decision today. It doesn't change everything, but it's a step. Then you repeat it tomorrow, and the next day, and the next. At first, nothing seems different, but over time, patterns form, habits build, your thinking sharpens, and suddenly, you're not the same person anymore. That's consistency. Quiet, steady, powerful. Now let's bring this back to your journey. You've learned about structure, you've explored strategy, you've begun to think differently. But now, the real question is, will you stay consistent? Because understanding is the beginning, but repetition is what creates results. Now here's something important. Consistency doesn't mean perfection. You will make mistakes. You will have off days. You will feel uncertain at times. That's normal. What matters is that you return, that you continue, that you don't stop. Because stopping is what resets progress. Now pause here and reflect honestly. Where in your life have you been inconsistent? Not because you didn't care, but because you didn't stay committed. Because identifying that pattern is the first step to changing it. Now here's the shift. Stop aiming for perfection. Start aiming for consistency. Because perfection delays action. Consistency builds results. Now imagine your future. If you stay consistent with what you've learned, you think differently, you act intentionally, you make better decisions week after week, month after month, year after year. What does that become? It becomes a completely different life, not overnight, but inevitably. Now here's a line I want you to remember. You don't build wealth in big moments. You build it in consistent decisions repeated over time. And in the next chapter, we're going to step back and look at the bigger picture, the long game. Because everything you're building is not just for today. It's not just for this year. It's for your future, your freedom, your ability to live life on your terms. And once you understand that perspective, you stop chasing quick wins and start building something that lasts. Chapter 21, The Long Game. Building wealth that lasts. Most people are in a hurry. They want results now. They want change fast. They want proof that what they're doing is working immediately. And because of that, they make decisions for the short term, quick gains, fast returns, immediate relief. But here's the truth. Short-term thinking creates short-term results. And real wealth, the kind that gives you freedom, control, and peace, is never built that way. It's built slowly, intentionally, over time. Now pause, because this is where your perspective must shift. Everything you've learned so far, every strategy, every concept, every decision, only reaches its full power when you apply it with a long-term mindset. Because the system itself rewards patience. It rewards consistency. It rewards alignment over time, not quick moves, not emotional reactions. Now think about this. If you focus only on today, you make reactive decisions. You chase what feels urgent. You respond to pressure. But if you focus on the long game, everything changes. You think differently. You act differently. You prioritize differently because your goal is no longer just survival. It's sustainability. Now here's the shift. Wealth is not about winning today. It's about building something that keeps winning over time. Let that sink in. Because that mindset removes pressure. It removes the need to rush. It allows you to make better decisions. Now, let's go deeper. What does the long game actually look like? It looks like structure, building systems that support you. It looks like patience, allowing your decisions to compound. It looks like discipline, staying consistent even when results are not immediate. And most importantly, it looks like clarity, knowing where you're going and why. Now imagine this. Two people start the same journey. One focuses on quick results. They chase trends. They react emotionally. They change direction constantly. The other focuses on the long game. They build slowly. They stay consistent. They align their actions with a clear strategy. At first, there's no big difference, but over time, the gap becomes undeniable because one built momentum, the other chased moments. Now, here's something important. The long game requires trust, not blind trust, but informed trust. Trust in the process. Trust in your decisions. Trust in your ability to stay consistent. Because without that trust, you'll second-guess yourself. You'll hesitate. You'll drift. Now pause here and ask yourself honestly, have you been playing the short game? Have you been looking for quick wins instead of building long-term strength? Because that awareness is the first step to changing direction. Now here's the deeper truth. Time rewards the disciplined, not the fastest, not the loudest, not the most reactive, the most consistent, the most intentional, the most patient. Now imagine your future, 5 years from now, 10 years from now, if you stay on this path, if you apply what you've learned, if you remain consistent. What does that look like? More control, more clarity, more freedom. Not because of one big decision, but because of many small aligned ones. Now here's a line I want you to remember. The people who win financially are not the ones who move fastest, but the ones who stay in the game the longest with the right strategy. And in the next chapter, we're going to make this even more personal, because everything you've learned means nothing if it doesn't connect to your life, your situation, your goals, your reality. We're going to bring this down to you, your next steps, your decisions, your direction, because this is no longer just information. This is your opportunity to build something real. Chapter 22, Your Personal Strategy, Turning Knowledge into Your Reality. Now it becomes personal, not theory, not examples, not concepts. You, your life, your income, your decisions. Because everything you've heard so far only matters if it connects to your reality. And this is where most people hesitate again. They think, this sounds powerful, but how does it apply to me? Where do I even start? What's my next move? And those questions are exactly where your transformation begins. Because now, you're no longer just learning, you're positioning. Now, here's the shift. There is no universal strategy. There is only your strategy. Let that sink in. Because your situation is unique. Your income is different. Your goals are different. Your opportunities are different. So your path must be intentional, designed, not copied. Now let's break this down. Your personal strategy begins with 3 simple questions. Not easy, but powerful. Question 1. Where am I right now? Not where you want to be, not where you pretend to be, where you actually are, your income, your structure, your habits. Because clarity starts with honesty. Now question 2, where do I want to go? Not just financially, but in terms of control, freedom, flexibility. Because wealth is not just about numbers. It's about how you live, how you decide, how you move. Now, question 3. What is the next step that moves me closer? Not 10 steps ahead, not a perfect plan, just the next step. Because that's where progress begins. Now pause here and answer those questions honestly, because that moment is more powerful than any strategy. Now let's go deeper. Your personal strategy is not about doing everything. It's about doing what matters most for your situation. Because if you try to apply everything at once, you will overwhelm yourself, you will freeze, and you will stop. But if you focus on one direction, one area, one shift, you create movement. Now imagine this. You identify one part of your financial life that can be improved. Maybe it's awareness, maybe it's structure, maybe it's decision-making, and you focus on that. You learn, you apply, you refine. Over time, that one area improves, and as it improves, it influences everything else. That's how systems grow, not all at once, but step by step. Now, here's something important. Your strategy will evolve. What works today may not be enough tomorrow, and that's okay, because growth requires adjustment. But as long as you stay aware, as long as you stay intentional, you will keep moving forward. Now think about this. Most people never reach this point. They never stop to design their life. They never question their structure. They never take control. But you're here. You've listened. You've reflected. You've started to see differently. And that awareness is rare. Now the question is, what will you do with it? Because this is the moment where everything can change. Not dramatically, not instantly, but directionally. Now here's a line I want you to remember. Your future is not built by information. It's built by the decisions you make after you receive it. And in the next chapter, we're going to address something critical, something that silently destroys progress for most people: overcomplication. Because the more you learn, the easier it becomes to overthink, to overanalyze, to hesitate. And if you're not careful, you'll turn clarity into confusion. So in the next chapter, we simplify everything. We strip it down. We focus on what truly matters, because simplicity is what allows you to move, and movement is what creates results. Chapter 23. Simplicity, the edge. Most people ignore. The more you learn, the easier it becomes to feel overwhelmed. More strategies, more concepts, more possibilities. And suddenly, what once felt clear starts to feel complicated. You start overthinking. You start questioning every decision. You start hesitating, not because you don't understand, but because you're trying to understand everything at once. And that is where most people lose momentum, not from lack of knowledge, but from too much complexity. Now here's the truth. Complexity slows you down. Simplicity moves you forward. Let that sink in. Because the goal was never to know everything. The goal is to act on what matters. Now let's break this down. When people first discover new financial ideas, they often try to apply all of them. They want the perfect system, the perfect structure, the perfect plan. But perfection creates paralysis, because the more variables you introduce, the harder it becomes to move. Now here's the shift. You don't need complexity to build wealth. You need clarity. And clarity comes from simplifying, from focusing on what truly matters. Now think about this. Out of everything you've learned so far, what are the core ideas? Structure matters, planning matters, behavior matters, consistency matters. That's it. Everything else builds on those foundations. So instead of trying to do everything, you focus on those principles. You apply them in your own way. You build gradually. Now let's go deeper. Why is simplicity so powerful? Because it creates action. When something is clear, you move. When something feels complicated, you delay. And delay is what keeps most people stuck. Now imagine this. Instead of overthinking every decision, you ask one simple question. Does this move me closer to a more efficient, intentional financial life? If the answer is yes, you move. If the answer is no, you pause. That's simplicity. Not easy, but clear. Now here's something important. Simplicity is not about doing less. It's about doing what matters most. Because when you remove the noise, you focus on impact. You focus on direction. You focus on progress. Now pause here and reflect honestly. Where have you been overcomplicating things? Where have you been waiting for perfect understanding instead of taking simple action? Because identifying that pattern is the first step to breaking it. Now here's the deeper truth. The most successful people are not the ones who know the most. They are the ones who execute the simplest strategies consistently, because simplicity scales. Simplicity compounds. Now, imagine your life moving forward. You think before you act. You understand the system instead of fearing it. You make decisions with awareness instead of guesswork. You build structure instead of relying on effort alone. And over time, you notice something. You feel less pressure, more clarity, more control, not because money changed overnight, but because you did. And that's the real secret. Not tax-free wealth, not strategies, not systems, but transformation. Because once you change how you think, how you act, how you decide, your financial life follows inevitably. Now here's something important. You are not alone in this journey. There are others who are waking up, others who are questioning, others who are choosing to think differently. And every time you take a step forward, you become part of that movement, a movement of people who no longer accept default paths, but choose to design their own. So here's your moment of action. If something in this audiobook shifted your thinking, don't let it stay in your head. Write it down. One idea, one realization, one sentence that stayed with you, and commit to it, because that commitment is the beginning of change. And if this journey resonated with you, if it challenged you, if it made you think differently, then do something simple. Hit like, not for approval, but as a contract with yourself, a signal that says, I'm not going back to how I used to think. And if you're serious about building something real, share in the comments. What is one action you will take after this? Because when you say it out loud, you make it real. You hold yourself accountable. And if you want to stay on this path, if you want to keep building awareness, keep sharpening your thinking, then subscribe, not as a button, but as a commitment to growth, to discipline, to becoming someone who moves with intention. Because this is not the end. This is the beginning of a new way of thinking, a new way of acting, a new way of building your life. And as you move forward, remember this one final line. Wealth is not something you chase. It is something you build quietly, intentionally, and strategically until one day it becomes undeniable. Take that with you and start building